watching
you
this market
remember last
deteriorate.
time?
We read everywhere, essentially, down by 45%. We're down 16%. Dow at the same time has fallen about 10%. The stock market is now down 21%.
We're now down 43%.
What in the world is happening on Wall Street?
Two-year no yields went from 190 to 166 in the blink of an eye. The NASDAQ, everything and more has been wiped out. It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world,
crashes.
the opening bell is going to ring
You've been warned.
in 5 seconds, and to be honest with you, we wish it wouldn't.
Traders here working the phone say a lot of their
Monday.
customers are freaked out,
Countdown
waiting to see how low
is
the
on.
Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%. Research in Motion 10%.
And we're not getting the bid one, and we're not getting the stop trading, and we see where the buyers are. We're just every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
You can't look at it after you buy it. It's so horrible.
We've had an 8-day losing streak in the Dow that in percentage terms puts it on
You've
par,
been warned.
close to the loss
Black
suffered in
Monday.
that crash in 1987.
Countdown
Close to
is
that.
on.
This market is as volatile as you'll ever see.
Traders say this is the craziest day they have ever seen in these markets. Veteran traders say they've never seen anything like it.
Okay, they call it a formula. Legalized comedy. All right, so that's...
This is CNN Breaking News.
You're in the CNN newsroom. I'm Jessica Dean in New York. We're just about 15 hours away now from Wall Street's opening bell. And right now, the Dow futures are on pace for a steep decline, plunging more than 1,500 points as President Trump's escalating trade war continues to send jitters throughout Wall Street. The markets are bracing for what could be another chaotic week after losing more than $6 trillion in 2 days. The next round of President Trump's tariffs set to go into effect Wednesday. China will be one of the countries hit hardest with a massive 54% tax on all goods imported into the United States. And I want to start there. We're going to go straight to CNN's Mark Stewart, who is in Beijing for more on this. Mark, we're about 2.5 hours away from the Asia markets opening. So set the scene for us.
Yeah, Jessica, the apprehension that we are feeling from both Main Street and Wall Street, as you see in those future numbers, are certainly also being felt here in Asia. In fact, I was messaging with one analyst last night who described the atmosphere as we approach the market open here in Asia as panic. I heard from one economist who used the phrase sell-off. It's a fiscal term, meaning that people are going to want to hold on to their cash. They're going to be very defensive. So as markets open in Asia in the next hour or so, we are expecting to see a lot of caution. When markets closed on Friday, we saw a lot of declines, most notable in Japan and South Korea. That is home to the Asian auto sector. That is home to these auto giants like Honda, like Toyota, like Hyundai. So that's something we're going to be watching in particular. The other thing which I'm curious to see are the narratives that are going to emerge in the hours ahead. In the sense, are we going to hear world leaders from here in Asia, such as from Japan and Vietnam, which have been highly targeted during these tariffs, are they going to say that they have phone calls lined up with the president and vice versa? That's going to be very interesting to watch. Also, as far as China, one analyst pointed to me the fact that these tariffs are a declaration that China is going to be strong and it's going to be very serious. So while there's so much talk about negotiation, at least this may be one signal that China in this broader tariff discussion is going to be very firm. Jessica, the other thing I want to point out is that if you go to CNN.com, we have what's known as the Fear and Greed Index. It looks at stock prices. It's a way for us to give an assessment about how people are feeling about the markets and Wall Street right now. Currently, this index, the gauge, is at extreme fear. 1 year ago, it was neutral. So it is a reflection that the news in the world really can impact the numbers on Wall Street. So to say that people are buckling up or bracing for a very wild day ahead here in Asia, Jessica, that is certainly not an understatement.
Yeah, and numbers on Wall Street can then affect numbers on Main Street as it goes. I want to ask you, too, about China's retaliatory tariffs on the U.S. goods. Could we see more when the new tariffs go into effect Wednesday?
I mean, look, there is this possibility that we are going to see retaliation from both sides. If we look at this U.S.-China relationship, it's very much tit for tat. You hurt us, we're going to hurt you back. And as we saw during the first Trump administration, that is no exception. I think we may get some clarity in the hours ahead at around 3 o'clock local time here in Beijing, 3 in the morning where you are on the East Coast. That's when China's Ministry of Foreign Affairs holds its daily press briefing. That is a chance for reporters to ask questions to a government official. Sometimes, a majority of the times, the responses are usually pretty general, pretty vague, but with this heightened atmosphere, maybe we'll get a little bit more specific guidance as to what China is thinking. Again, that's going to happen in the hours ahead during the trading day here in Asia, Jessica.
Okay, Mark Stewart, stay close. We're going to check back in with you shortly as a lot of this is unfolding in real time. As these financial markets
Suggests that there's real disappointment that the president is doubling down on his errors, that policies that everybody on the outside sees as misguided are simply being reinforced, and that's very damaging for our economy.
President Trump's trade advisor, Peter Navarro, told investors to, quote, sit tight, don't panic. We've heard trust in Trump. And then, as my colleague Betsy Klein was reporting, we've just heard a lot of mixed messaging. Are these tariffs for negotiation? Are they to bring back manufacturing? Are they staying? Are they going? What do you think about the messaging coming out of the White House and the advice to everyday Americans to just trust in Trump on this?
Economic policies coming from administrations for 45 years. I've never seen as much incoherence and irrationality as we saw on television today. Self-evidently, you can't both use tariffs as a crowbar, threatening other countries and saying you'll remove them if they cut their tariffs, and also promise that there'll be a revenue source and an inducement to businesses to locate in the United States. And the administration doesn't have a coherent message on why it's doing the largest tax increase that the country's had in 50 years. And usually when you do something hugely consequential, you have a clear rationale that's consistently delivered. And we're not getting that. Largest tax increase in 50 years, a tax increase on consumers, $4,500 a car, according to Ted Cruz, 17% increase in clothing and apparel prices, according to the Yale Budget Lab, $3,800 per consumer, according to the Yale Budget Lab, and they can't even agree on why they are doing it. It's no wonder that markets have lost confidence in this administration, and this administration telling people that they should ignore the market judgment, I don't think is going to be very reassuring to people. What would be reassuring would be a sense that the signals that have been sent from politicians in both parties, from the Federal Reserve, from dozens of other countries, from almost every
read of some of these risk markets this morning with the future trade underway. It is a clear risk off and uncertainty and fears of recession, perhaps, with S&P 500 futures down more than 5%. Brent crude down more than 2.5%, with the Saudis cutting their price of oil. That's also another recessionary fear of energy is trading off. We also have a read on FX that's been trading for the past few hours. We are at the lows of the evening when it comes to the dollar versus the yen. There is a clear bid into havens that extends to Treasury futures too. Now, as to where the roadmap goes for this market, we have these assets open, but in about 2 hours' time, we're going to get more liquidity injected into the market.
Okay, troops, welcome to tonight's episode of Around the World in 80 Tariffs, where we dive into the tragic-comic world of global trade under Trump's leadership, or, as the financial markets like to call it, the Great Plunge. Let's embark on a journey through a landscape dotted with trade wars, market crashes, and international dismay. It's sort of like a worldwide game of economic Jenga where Trump pulls out the bottom pieces just to see what happens. Yeah. Okay, first stop, the USA, where Trump's latest economic fireworks have lit up the skies, with the stock markets taking a nosedive deeper than a submarine in the Mariana Trench. It seems like Wall Street, to me, is on a roller coaster that only goes down. The Dow dropped down a staggering 600 points on Friday as investors ran for the hills, screaming for economic sanity. The dollar down, slumped like a tired toddler. It's all down, down, down.
The president doesn't try to reach out and reward these countries and companies that play by the rules in the 1987 scenario. The one where we went down 3 days and then down 22% on Monday has the most cogency. We will not have to wait out too long, will we? We'll know by Monday.
Crossing the Atlantic, we find Europe, where leaders are scrambling to shield their economies from the shrapnel of Trump's trade bombs. The EU, already finalising the retaliation package, is not exactly sending Trump a thank you card. Instead, they're gearing up for a counterattack which promises to make this trade war, well, more of a trade war apocalypse. Germany's economy minister predicts, actually, Trump might buckle under pressure. But let's be honest, when has Trump ever backed down from a fight with lots and lots of attention? And him being at the centre, even if it's like watching the Titanic go down. Flying over to Asia, China hasn't taken things lying down either. In response to Trump's tariffs, China has slapped a hefty 34% retaliatory tariff on US goods. And it's like watching a table tennis match, ping pong match, but every volley is an economic sanction that could hit consumers worldwide.
And I have to say, we're getting a very Pollyannish view of what's happening from the Trump administration.
I disagree with that, Jake.
Well, let me just finish the question. Let me just finish the question and then you can answer.
That's not right.
But there seems to be a lack of acknowledgement of the real pain and panic people are feeling right now. And I don't know if you saw it because you were on TV, but there was a moment on Thursday, you were on Fox Business, you were praising President Trump's leadership, celebrating these tariffs, and all the graphics surrounding you, again, this is on Fox Business, showed the markets in a nosedive. And so you disagree that I say there seems to be a disconnect between what you're saying and the reaction of the world. Tell me why you disagree.
Listen, the president has, even in his State of the Union, I believe, he said that there will be some uncertainty.
It really is not good news. Who knows what's going to happen next week? And then there's the chaos brewing south of the border. Mexico, alongside Canada, faces a wall, not the one Trump promised, but a wall of economic barriers that could stifle trade and darken economic forecasts right across North America. It's just not looking good, is it? I'm sorry to sound sarcastic. As we circle back to the US, Trump seems to be on a tariff spree, hitting goods from Vietnam, Japan, South Korea, and even Switzerland with new tariffs. And a few countries that have penguins. Anyway, so as you wander the aisles of your local store, wondering why everything costs more, you can thank Trump's tariffs roulette for that, because, yeah, he's solely to blame. To sum it up, Trump's Liberation Day, Inflation Day, might have liberated us from stable markets and economic predictability. Was that the idea? Anyway, so whether you're an economist, a shop owner, or just someone trying to buy a car, brace yourself. Trump's tariff tornado is just getting started. And in this global game of economic risk, it seems like absolutely no one is safe from the fallout. And maybe I should get rid of the sarcastic tone. Stay tuned. All I can say is put your economic helmet on now and mind your money. Yeah.
Been the case for so long. I think you bring up a really important point, Rachel. It's not just the destruction of the economic vitality of the working class, but there has been a spiritual decimation that has come along with that. A crisis in masculinity because we shipped jobs that gave men who work with their hands for a living and rely on brawn and physicality off to other countries to build up their middle class. And then we imported millions and millions of illegals to work in construction, to work in, yes, manufacturing, what's left here, to work in landscaping, to work in janitorial services, to work in jobs that used to give men access to the American dream. Working class people now, they make just a fraction more than they made in the 70s, but the cost of the things that ensure the American dream, a house, a retirement, healthcare, an education for your kids. This stuff has skyrocketed, and so their purchasing power has been totally demolished. And what has the Democrats' response been to this? Let's open the border and bring in millions of people to compete with them for much less, right? So Donald Trump is simply saying no more to this and to the crisis in masculinity, which is, of course, why young men feel so attracted to what he's offering.
Yes, and when young men are not doing well, it's not good for young women either.
From the major banks, from the CEOs of hundreds of businesses, from representatives of labor, that this is a mistake, that the administration would be signaling that it had heard the message. Instead, what we've heard this weekend is a message of doubling down. And eventually they will, I suspect, be forced to change course. But the sooner they do it, the less costly it will be, and the less long-run damage will be done to the credibility of the United States.
And I just heard you listing out all of those types of people and institutions that are waving their arms, saying, "Please don't do this." Just to play devil's advocate, to try to help us understand, is there a way in which this works, in which it can produce what they are promising?
I think it's extraordinarily unlikely. I guess the best case would be if almost all other countries did some kinds of adjustments and then they withdrew all the threatened tariffs. But Advisor Navarro has said for sure that's not going to happen. Advisor Lutnick has said he's sure that's not going to happen. From the reporting, those are the two people who are consistently in the room with the president. The people who've sent more reassuring messages are people who are only tangentially, unfortunately, involved in setting these policies. And this is a president who's been saying we need tariffs for 40 years throughout his career. He went back to echoing Lee Iacocca when Lee Iacocca was saying things like this 40 years ago. So it's hard to believe that that's where it's going to go. But what would be best would be if there was some adjustment in other countries and then these policies were withdrawn. And if there was a signal that we weren't going to go back to these kinds of tactics, because as long as there's the possibility that we'll go back to these kinds of tactics, there's going to be enormous uncertainty, and that uncertainty is going to discourage spending. That uncertainty is going to discourage new business investment, and all of that's going to slow down the economy. I was saying a week ago that I thought the odds were 50-50 that we'll have a recession. I now think the odds are 2 and 3 or better. Certainly they're 2 and 3 or better if the administration stays on its current policy path. The best hope for the economy is a reversal of the current policy path.
I spoke with Republican Congressman Carlos Jimenez yesterday, and he kept telling me he sees this as a market correction. We were due for this. He said he's seen this happen many times in his lifetime. Do you agree with that assessment?
Respectfully, the congressman does not know what he's talking about. We have only seen a 2-day move as large as this 3 times since the Second World War. So he hasn't seen it many times in his lifetime. This is something we saw in the 1987 crash, in the 2008 crash, and the pandemic. None of them were good things. And so saying he's seen this kind of thing many times and it's not important is simply demonstrating his lack of financial and economic knowledge. This may be the first time, but the statement you're quoting is just wrong.
And there are a lot of people out there who are nervous. There are people on Wall Street and CEOs, obviously, that are very, very nervous and very frustrated, I think. There are also a lot of Americans out there who elected President Trump to bring down the cost of living in this country, which they think is just too high and doesn't make any sense for them and is too hard to get through day to day. What do you say to those people, to those Americans who are looking around and saying, I don't know what to do. Is this going to affect me? What should I prepare for?
I think what I'd say is that Ted Cruz, a super Republican, super conservative senator from Texas, who's been a strong supporter of the president, says that automobile prices are going to go up $4,500. That all kinds of businesses are saying they're going to have to pass on higher prices because of these tariffs. That estimates suggest that clothing prices are going to go up 17%, that they're right to want lower prices. They're right. I'm a Democrat, but I was early to say that President Biden's policies were not well designed to prevent inflation and were going to set off inflation. But putting taxes on things that are sold is the quintessential way to add to prices, not to reduce prices. So yes, they're right to want lower prices and cost-reducing policies, but those policies are not tariffs. Those policies are not driving down the purchasing power of the dollar as the president's policies have done. So he is not responding to what was the core desire of people who helped him get elected. He should be pursuing policies that are directed at having lower prices. You know, one example of that is we had a set of programs that were really about what the president talks about, domestic competitiveness for lower prices. The CHIPS Act, so we wouldn't be dependent on Taiwan, China for all our semiconductors, exposing us to big risks of higher prices. And the president has cut off that program. We had programs for new medical research that would enable lower priced pharmaceuticals and cures. The president is cutting off those kinds of approaches. So yes, people should be worried about the cost of living. It's just that the policies we're pursuing are going in the wrong direction. The problem with the stock market going down is not that the primary issue right now is the wealth of the wealthiest Americans who own the stock market. It's that the stock market, by judging what's going to happen to all the American companies, is making a prediction about what's going to happen to the economy, and it's not a very positive prediction.
Yeah. All right, Larry Summers, thank you very much for your time tonight. We really appreciate it.